Hi, all. Welcome to Bond Bytes, the daily bond market highlights from INR bonds. And in today's Bond Bytes special, we talk about the Fed policy. And as you all must be aware now, that the US Federal Reserve has finally acknowledged rising inflation pressures in the US. You have you have 3 decade highs inflation, and they have guided for rate hikes in the next couple of years, starting March, and also that they are tapering of bond purchases much faster than what was stated earlier. But having said that, in the next couple of years, the Fed, despite all the rate hikes, the Fed funds rate, which is a key interest rate for the Fed, will be around 1.75% to 2%. Inflation in 2024 is expected to be around 2.4%. Now, clearly, I think the Fed is not really wanting to control inflation through drastic rate hikes and other steps. If you really look at it, the policy is still very, very loose. They have only curbed bond purchases. They are not starting to suck out liquidity. They are only starting to hike rates slowly over a period of 2 years and not increasing it much faster. And they have shown clear guidance. So clearly, they are choosing to tell the investors that, yeah, go ahead and do what you want. We will not worry about inflation too much, while recognizing the inflation that is there in the economy at present. So the markets clearly, the equity markets in the US reacted positively. Initially, it was down, but then closed higher. The US bond 10-year yields also did not react too much. They closed at 1.47%, actually down from 1.67% seen a few weeks back. So clearly, the US interest rate, US Treasury bond yields are also not, showing too much of worry at this point of time. And in the Indian markets, we saw a bit of volatility in the equity markets. The Sensex Nifty rose, but then flat. And the rupee also started to almost at similar levels. And the 10-year gsec yield in India is just marginally up. So clearly, there is no great fear at this point of time, given that the Fed is now acknowledging the inflation, but clearly not acting on it in a drastic manner. And it remains to be seen what will be the effects if Fed being lax on inflation. Will it push up? Will it make inflation rise very, very fast going ahead? There are many inflation talks out there, all sounding doomsday for the markets. But at this point of time, clearly there is no clear worry at the market level on this particular aspect of Fed looking to raise rates and guiding for rate hikes going forward. Thank you very much for listening in, and do not forget to log into our Quick Invest digital platform for bonds. The link is given in the description below. And in this, you do get the best bonds that suits your investments for given Fed and RBI policies and other economic environment, and also meeting your financial objectives. And do not forget to subscribe to our YouTube channel if you have not done so already. Thank you very much.